Continue.
Yes, you can continue.
Welcome to our webinar on financial wellness. Before we get started, we'd like to apologize for the background noise. There's a construction going on. So our theme for today is financial wellness, and we will be touching on budgeting basics, debt management. We'll walk you through how to create a budget, how to stick to a budget, having an emergency fund. Our speaker of the day will also walk you through debt management, good and bad debt, getting out of the debt trap. And we hope that after this session, you'll be empowered enough to manage your finances. Karibuni sana. So we have a panel of two speakers. One who is Martin Oluoch. He'll be the sponsor representative of the day. You can see him waving. We also have Rina Hicks, who is the speaker of the day. And we are also joined by a sign language interpreter, Fiona Moresa. So at this juncture, I'd like to welcome the sponsor representative, Martin Oluoch. He is the head of pension at Preterm Life. He manages and oversees the operations in the pension administration department. He has 17 years experience in the industry and is a member of the AKI Pension Committee. Karibu Martin, the floor is yours.
Thank you, Magdalene. Good morning, ladies and gentlemen. Welcome to the Financial Wellness webinar. The Financial Wellness webinar, of course, is anchored under the Preterm logo brand statement, with you every step of the way. So the key purpose of this webinar, of course, to guide you into navigating your roadmap to financial stability. And the key focus is going to be in pensions or retirement planning. So we do have our keynote speaker, Rex, who will be taking you through the presentation. So mine is just to briefly talk to you about Preterm. The brand statement, with you every step of the way. So our focus is to give you an all-rounded financial services solution. So Preterm focuses on ensuring that you are insured in various areas, be it life insurance, general insurance. If you want to insure your business, your property, you will get that insurance in Preterm. Secondly, we do provide you with investment solutions in various products, in money market, in equities, in bonds, and in so many other products that can guide you through your investment solutions. Lastly, we also focus on property, we focus on health insurance, and we have been doing this for the last 66 years, actually, where Preterm has been providing financial service solutions all through these years. So with that, I can hand it back to Magdalene to take you through the next step. Thank you.
Thank you, Martin. So as you've heard, we have a lot in store for you. So be anticipateful and stay active. You can drop your questions in the chat box. We will have a Q&A session at the end of this presentation, and we'll take your questions and direct them to the speakers of the day. So help me in welcoming Rina Hicks, the speaker of the day. She is a dynamic investment banker and financial advisor with 19 years of experience and is currently serving as the operations director at FIDA Investment Bank. She's also an author and has authored the book Moneywise, and is an entrepreneur who has founded the RH Group Limited and Moneywise, which is a content creation platform on investment and trainings. Recently, she was voted top 10 women to watch out in 2022 in the banking and finance sector in Africa. Karibu Rina, the floor is yours. Rina, I think you're muted. We can't hear you.
I have tried to unmute. Thank you for unmuting me. I've really tried it, but the host was not allowing. It said something like that. But good morning. It's so good to be here. It's good to see all of you. I applaud you and honor you for taking your time out this morning to come and have this conversation around financial wellness. And I also honor Britain for taking charge of this conversation and wanting to add value to its customers. Yeah, so I am Rina, and I'm here to discuss how we are going to enhance our financial well-being. So I'll go straight to the agenda because Magdalene has introduced me. Thank you, Magdalene. And today we'll be talking about debt management. We'll look at how do you create a budget, and why do we even need it? And then we'll go into money management systems and how we can manage our money so that we are able to have peace where finances are concerned in every season of our lives. And then finally, I want to deal with a bonus subject that I keep getting asked what my view is, and it's on managing black tax. And I'll tell you a little bit about that if you have never heard of that term before. But let's start with debt management. So there's different ways people approach debt, and some say debt is bad, some say never go into debt. But the truth is that, in my view, we have good debt and we have bad debt. So debt is not necessarily all bad. It just needs to be managed well, and we'll be talking about that. But allow me to start with a story. So this is Sally. Sally is not her real name, not her real picture, but somebody I know. And Sally did very well in her career. She went up all the way to director level and decided to resign because she was financially free. She was stable. Her and her husband owned their home, and they were generally very secure financially. At least that's what she thought. And one day, during her retirement period, it was a nice, beautiful Thursday morning, like today, and she hears the doorbell. She goes down the stairs and opens the door, and she sees two men in overalls. And they had this form with them, and they said, my dear friend, we are here to ask you to leave the house. And she looked at them in shock, wondering, excuse me, leave the house? Yes, toka kwa nyumba. And so she looked at the document and she said, I am sorry, but you need to leave because you're in the wrong house. We don't have a loan against our house. Would you kindly just leave? Anyway, after back and forth, the two gentlemen decided to leave her alone and said that they would be back. So in the evening, as she's catching up and checking in with her husband, she says to him, can you imagine there were these two men from such and such company that came and wanted to auction and to get us out of this house? And as she looked at her husband, he just looked down and said, now there's something I need to tell you. And she was in shock because her husband basically told her that he had taken a loan against their house for a certain project deal that he had and had not told her. And unfortunately, the deal did not work out. Anyway, long story short, they both lost the house, and you can imagine what that did for them, both financially, but also for their relationship. Debt can be very stressful if it's taken the wrong way and taken to do things that are risky. Now, I want you to put it in the chat so that we are interactive and we can hear who's here and what's happening. What is the worst borrowing decision you have made? Please put it in the chat. Type it in the chat if you're on the Zoom call, or if you're on YouTube, just put it in the chat there. Our team will be able to see it so that we can just sample a few comments. What is the worst borrowing decision you have made? Let's see. So I will probably address it because I haven't seen anything yet. I can address it as I go. Okay, somebody says mobile loan. Mobile loan. Yeah, those can be quite something. Somebody else says borrowing to go clubbing. Someone else says taking a loan for a friend. Oh my gosh, that one is, I'm sorry about that. Someone else says borrowing to support friends. Huh? Deal in Ivana next week. Itaiva next week. You know that thing? I know that one. Microfinance loans, borrowing to do a wedding. I get that completely. I get that completely. So I want to discuss borrowing blunders to avoid. What are some of the things we should just avoid doing? Now, a lot of people borrow because you qualify for a loan. without a clear plan. You get an SMS from some bank or financial institution that says, oh, you can borrow 15,000 or 50,000, and we are here to help you survive this weekend. And then you borrow because you qualify, but without a plan. Another one is lifestyle creep. A friend told me how they were in a big problem, and her significant other decided to take a loan to do a birthday party for their daughter, and they were already in debt. Even with this club where they're doing the party, they're already in debt, and there was a surcharge of 10% per month, and they still decided to take that loan so that they can sort of stay in the same lifestyle. This lifestyle creep that comes when we earn more, we want to be able to pay for nicer things, live in nicer places, drive better cars, wear better clothes, and sometimes we end up borrowing to continue to withstand that lifestyle. That is also a borrowing blunder. And then there's failure to consider the impact that this borrowing has on your available cash. That means you borrow without really thinking through, how will I pay those monthly repayments that I'm meant to pay? And how will that impact my available cash every month? And given how much I'm earning and what my expenses are, can I actually afford to take this loan? Some people just think, okay, let me just look at, can I qualify, and then go ahead without considering this. And then not considering the total cost of credit. There's usually other costs, things like admin costs, insurance, and some companies even charge every year some of these costs, like admin costs. Sometimes there's even default costs. So if you pay early, there's a cost, and so many other costs that come with taking a loan. It's important to understand, including, is my loan on reducing balance or not? Some people say, yeah, it's on reducing balance, but the small print says per year, and that adds the cost. So please consider the total cost. Not repaying. When you take a loan, please repay. If you ever get to the place where you can see and foresee that when the repayment is due, you'll not pay, please talk to the person you owe money so that you're able to negotiate if possible or find an alternative way. Taking overdrafts for everyday life is not a good idea. Big blunder. So you've gone to the supermarket, you check your M-Pesa balance, oh shucks, and then you now buy using Fuliza. Now, if you have money somewhere else, that's fine, because then you can pay it back fairly quickly, perhaps even on the same day. But taking overdrafts that you then end up in debt for everyday life is not a good idea. Another blunder is diverting the borrowing from your initial intention. So you wanted to borrow maybe to build a small shop and rent out the shop and get an income from it. But when you get the money, you go and pay the mechanic for your car. Borrowing to invest in risky assets, that is a bad idea. Like one of the examples I was given in the chat, somebody has said, I have a deal, Taiva next week, give me money, and that is so risky. And then mismatch between the type of credit you're taking and the need. So maybe your need is long-term. You'll be able to get money back in a year and a half, but then you borrow an overdraft that will be due in 90 days. That is a mismatch, and it's a blunder. Now, for those of you who are married, lack of disclosure to your spouse is another blunder, because it causes a lot of angst in the relationship. It causes a lot of stress, anxiety for your spouse when they find out, and it can be detrimental to your relationship. So because I did say there's good debt and there's bad debt, what does good debt look like? And for me, I define good debt as debt that adds value to you, that leaves you better off. And that's what I call purposeful borrowing. And an example of purposeful borrowing is if you're in business. So let's say you're a caterer and you do meals every day. And maybe your average meals a day is 300 meals a day, but your business is growing. And then you apply for this contract and you get a contract to supply 2,000 meals over 1 week, which is so much higher than you had done before. Now, because they perhaps will pay you in 3 months, you may not have the cash, or what we call working capital, to be able to finance that job, buying tomatoes, buying onions, buying carrots, and everything that is needed to be able to cook for that job for that week. So you can go and borrow to then buy the things that you need, supply the client, and then you'll be paid back eventually. That's purposeful borrowing. Or you want to expand your business, or maybe you're in film and you want to buy equipment. That is purposeful borrowing. Now, Another one that's purposeful borrowing is investing. So perhaps that you've looked around, you've done your analysis, and you can see that this area is a good area. There's high demand for what it is I want to do. And so you then get into a real estate project as a result. That is purposeful borrowing. But even as you do those things and it's purposeful, you have to be strategic. Can you repay it comfortably? So if, let's say, I'm buying a unit and I want to, or maybe it's a shop that I've gotten a space, and I want to be able to buy it. If the shop does not get a tenant, or if my tenant does not pay, can I repay comfortably from other sources of income? Because if I can't and the tenant doesn't pay, then I get into trouble. Another thing is that you have a limit of your ability to get a loan. You don't want to max that out. And ideally, you don't want to borrow more than 30% of your net income, because then you stretch yourself too much and you can easily get into more debt as you're trying to get out of a mess that you made. Because life happens and emergencies come that you don't foresee. Now, before you borrow, another way to be strategic is not just to take the first loan that is available because it's available. Compare your options by looking at costs, looking at the terms, looking at what happens if I am not able to pay 1 month. Understand what the different offerings are and then make a decision. Is it the SACCO I'm going to go for? Is it the bank I'm going to go for? Is it a microfinance I'll go for? And then compare the options. And even within SACCOs, by the way, before you join a SACCO, you need to understand, when I borrow money, what are the terms and what is the actual cost? Then decide which SACCO you. But then there are risks of taking debt. So the proper use of debt can actually make you propel you so high and you can grow so much faster. But there are risks. And these risks are, one, I might buy an asset. Yes, I'm hoping it will increase in value, but then the value doesn't increase. Or maybe the market crashes, or the market is not good and the economy doesn't do well. And so the value, I'm not even able to get buyers when I need to. The other thing is that I may not get the cash that I need because I've rented it out, but the tenant is not paying because they're in a challenge. Or if it's I've borrowed for a business, then my client is not paying me back. And so then I'm in a mess. Now then interest rates can increase. So I take this loan, it's a 3-year loan, and I know I've taken the loan and it's at 17%, for example. And then 9 months later, interest rates are at 22%, like we have experienced in the recent past. That's another risk. Another risk is your own personal risk. You could have a situation where your income is impacted in one way or another, and then you're unable to make payments when they fall due. And that now results in it being more expensive because there's penalties when you don't pay, okay? So those are the blunders. We've talked about blunders to avoid and also purposeful borrowing. So now I want to just take a step back and look at how can you get out of debt if you're in debt. There may be somebody who's here who's taken a loan, maybe they made a mistake, maybe it didn't work out and you're feeling stuck and overwhelmed, because debt can also come with a lot of stress. And I recognize that, but I want to say that it doesn't matter where you are. There's always a way out. There's always a way out. What you just need is a plan. So we're going to look at that right now. I'm reminded of a time when, and many times it happens to me, when I have so many things to do. I'm a mom, I have 3 kids, I have a husband, I have a demanding job, I have clients, so sometimes when you have so much in your mind, you can kind of get very overwhelmed. But the moment you sit down and write down everything that you need to do, somehow, the moment you write it down, you realize, okay, I can prioritize this list and see what is more important, and the stress then reduces. So the first thing I'll ask you to do is the same thing when you have debt. List that debt. Name of the lender, what is the interest, what is the amount. The second thing you need to do is understand your own expenses. How much are you spending every month? Write down those expenses, because by writing them down, you'll have an opportunity to review what you can cut out. And writing them down could be on an app, on an Excel sheet, on a traditional pen and paper. But then you look and see, okay, these are actual expenses last month. What can I cut out? And then if you can't see anything to cut out, you can ask yourself, what do I have in my house that I can sell? Maybe there's a juicer I was given at my wedding that I don't use. Maybe I'm a single person, I live alone, I have a nice bed and I can sleep on a mattress for a while I get out of this bed and out of this debt. And you can decide to sell even a bed. Maybe it's a watch, maybe it's jewelry. What can you sell to get out of this debt? Now, once you've done that, you'll be able to figure out what amount you can dedicate towards paying that debt. And then now, once you know the amount, then you can see, is it too much? Can I pay it off within the time I have? Maybe if it's a mobile loan, you might need to restructure it. So start thinking through, can I perhaps go to an organization that can buy out all these little loans, give me one large loan that is over 5 years, as opposed to these small loans I keep dealing with. Then you call your creditors, those you owe money, and just apologize and negotiate with them based on the amount that you can see you'll be able to repay a month. So let's now begin to see, how does this work? But once you begin your repayments, please be consistent. So now I want to go into step by step. How does this work? There's two options for you. There's two different options that you can choose. One is called the debt snowball, and the other one is called the avalanche method or the high rate method. So let's start with the debt snowball method and see how that would work. So you would list your debt, but now you want to organize the list from the smallest debt to the largest one. So like there, I've got my list. I owe the mechanic 20,000 and it goes all the way to the SACCO loan of 1,000,000 shillings. My total is 1.9. But now I've taken time to see who do I owe and how much can I then come up with. So then I start to see what are the minimums I need to pay for each loan. And then I'll know, okay, I can sell this old phone. There's something I don't use, I can sell and see how can I make minimum payments on everything except the smallest loan. For the smallest loan, I want to attack it with a vengeance. On this example I'm giving, the minimum monthly payment is 3,000 shillings. But the idea here is not just to pay the minimum. I want to see if I can pay 7,000 this month. You know, the next month, I want to see if I can pay more than that minimum so that I get rid of it quickly. Okay. And then once I've paid off that minimum, as I continue paying off the rest, I don't use that money for something else. That 3,000 I was using, I want to now prioritize the second loan, add to what I was paying as minimum for that second loan and continue like that. So instead of paying that minimum of 5,000, now I'll pay 8,000, which is the 3,000 plus the 5,000. So my minimums will be 8,000. And so I'll get to pay off the loan faster. Still looking for ways, how can I get another income? Keep prioritizing paying off that debt, and so on and so on. And it goes on that way until my debt is fully paid off. It's a systematic way, it's easy, and those small victories that you get with paying the small ones first just give you a boost, and they make you feel, you know, there's momentum, and as you continue, then you find that you're making really good progress. It is best, this method, when you struggle with being consistent. So the truth is we're emotional beings, and it's likely to be done, as opposed to when you just feel overwhelmed and it's like, gosh, I don't know what to do. So this is a good way to do it. But if you have a psychological loan, or rather a loan that has a big psychological effect, start with that one, not the smallest one. So like, I like using this example. If you owe a friend who you sit with, he's your colleague in the office, and he's now not talking to you. And, you know, is threatening you, or maybe it's your mother-in-law who you see every Sunday. It's like, oh gosh, I need to get rid of this loan. Start with that one. Okay, so pay off the one that has the biggest psychological impact first. Okay, so if you have any questions, any comments, any additional things, please put them in the chat and we'll address them during the Q&A. For now, I want to go into the second method, which is the high rate method. And in the high rate method, what happens here is that you will still list your debt, but you will list the debt from the highest first, highest interest rate to the lowest. So you might have a credit card loan, maybe the average rate is 45% per annum. Perhaps you might have a mobile loan, that one depends, maybe it's 7% per annum, per month. You know, maybe you have a SACCO loan, maybe that's 12% per year, sorry, and a bank loan. So whatever the loans are, list them from the highest interest first, all the way down to the lowest without looking at the amounts. And as you pay, you're paying extra on the highest interest and minimums on the rest. And you repeat that process as we did before until all the debt is paid. The thing with this method is that it is harder because your highest interest may actually have the highest amount. And it might take longer, but longer in terms of the psychological impact. You see, this one, your smallest one is small and you get rid of it quicker. But this other one, it's hard, but you get out of debt much sooner. So you will save much more by paying higher interest first. and you'll get rid of the more expensive debt much sooner. So if you can, this is actually a much better method. But if you're feeling overwhelmed and you're not very consistent, you could use the other method. So let's just conclude this discussion around debt management. Please, for as much as it is possible, do not borrow to finance your lifestyle, and pay no more than 30% of your salary in rent and utilities, meaning Kenya Power, water, and rent should not be more than your fat. This is a rule of thumb that is ideal. And I do recognize that in a country like ours, it's difficult for some people to have this. But as much as it is possible, please don't pay more than 30% of your salary so that you have some more to keep aside for saving. And then focus on minimizing your expenses. Save more aggressively so that in the future, when you want to do more things, and also because of retirement that is soon coming, you're able to have financial peace. And only borrow if it is an emergency. And the only other reason you would then, of course, borrow is when the opportunity is compelling, there's a good opportunity for you, and you've done your research and you can see there's going to be good benefits for you. All right? So that's debt management. Now I want us to move into creating a budget, because even as you're looking at repaying your debt, and also looking at moving from where you are to being able to have savings, being able to have an emergency fund, saving for your retirement, saving for your children's education, it's difficult to do without having a budget that works. And there's different kinds of budgets. But what happens? What is a typical situation? If I've been in this situation so many times where I get 20,000 shillings in cash. Maybe it's a payment for something or a gift for my birthday from different people. I put it in my wallet. And then 2 weeks later, I'm like Winnie the Pooh there wondering, okay, just think. I have 5,000 left. Where did 15K go? Who stole my money? Do you relate? Like money just seems to disappear a lot of times. And that's why we recommend a budget. And we do need a budget because it helps you to achieve your goals. It helps you to achieve your goals. You have certain things you want to be able to. We are all different and we have different goals. Some of us want to be able to finance our children's education. Maybe it's our own education. Maybe it's to travel. Maybe it is our future house that we want to start to pay off. Maybe it's to buy a car. I don't know. But it will help you to start to achieve your goals. And then it will give you that ability to exercise control over your money, so that your goals are achieved. It keeps you on top of your finances. You know exactly where your money is. You know what is owed. If it's June is coming, I need to pay my taxes. I have money set aside for that. It's not a surprise and you're not stressed out. And you can reduce financial stress. Actually, research shows those who budget and at least know where the money is going have significantly less financial stress. So what do? When you're looking to budget, you start by tracking your expenses so that you know, I spent X on transport, I spent Y on food, I spent this on eating out, I spent this on, all these different expenses that you have, write them down. But it also requires you to track your income, especially for those who have extra income. Maybe it's income from different investments, maybe it's income from different places, maybe you're a casual worker or you do gigs here and there. You receive money, and you don't know when it's coming, you don't know how it's coming, and so it can be a bit destabilizing. So the idea is, how can you know when income is expected and how much, and then also what am I spending money on? That way, then you will be able to make the right decisions and to budget properly. So you can use a tracking tool like an app, or you can use Excel or pen and paper, and then you create a spending plan that is aligned to your income and your goals. Many times people just sit and say, how much should I spend on food? And they write down a number. How much should I spend on transport? How much should I spend? And that's not a good idea because it's not based on reality. You want to spend time, at least 1 month, knowing what are the real expenses I have. Once you know those real expenses, then you can now create a budget that is aligned to the income that you have and your goals, but also within the reality of your personal circumstances. So the reality is, guys, the future is unknown and totally unpredictable. I was saying yesterday, a year ago, you told me that Nairobi would be flooded and some houses in very leafy suburbs would be submerged in water. I'd be like, you're kidding. You cannot be serious. People have lost homes. People have lost lives. I mean, we would never have been able to, look back and see that. I mean, look forward and see that it's going to happen. And we constantly have things that are happening to us that are surprises. And that's the reality. Another reality is that 8 out of 10 Kenyans are not saving and investing for retirement, which is a sad thing. That's 80%, unable to meet their day-to-day needs in the season of retirement. And then 80% of savers have less than 1 million saved for retirement. We're talking about people in their 80s, not 80s, I'm sorry, 50s, 60s, who are soon to retire and they have less than 1 million shillings. And then less than 1% of Kenyans will be secure in their retirement. That's a scary thought. That's a scary thought. And we don't want to be in that statistic. And that's why we're having this conversation on financial wellness today. The other reality is a lot of incomes are significantly reduced. I remember reading a statistic in the papers not too long ago that was talking about a research that was done, and those who were responding to this researchers were saying that there were about 60% who said that my income has reduced significantly, which is a sad reality. And the final one is that the cost of living has generally gone higher for a lot of us. That's the reality. And because of that, we have to just take charge where our finances are concerned. Take time to think through our money. Take time to plan and take time to use a budget. Whether that budgeting style is taking out money, putting it in M-Shwari and spending only that in a month, or saving a certain percentage and deciding that's what I'm going to save, or deciding I'm going to save 20% and the rest I will spend how I want. But you need to have a budget, some way of working out your money. So even with that reality, the question is, so now what? What do I do? And I want to suggest that you create a money management system, which is part of the budgeting process. Okay, the first thing I would say is you pay yourself first. Okay, so the typical situation for 80% of the population, your money comes in like this, whether you're in business or you're employed, doesn't matter. KRA has taken their money and other statutory deductions like NHIF and NSS, that goes. And then you have school fees or activities for the kids. You shop in the supermarket. You go for entertainment. You spend money on your data, on your phone calls, rent, and so on. Food. You then end up going out and enjoying yourself. Pay fuel for those of you who drive. And so you find you've spent all this money. It has all gone. And then you wonder, okay, how much did I save? That's the typical situation. I want to ask that we change that to an ideal situation where when income comes, the first place it goes is in investing in cash for opportunities, cash for emergencies, and then expenses. So we should not be spending more than 50 to 60% of our expenses on day-to-day needs. Okay, so what we need to do is have 60% on our expenses, and then the rest goes into either paying off debt, for saving for emergencies, or having cash for opportunities, and putting money in investment accounts like pension accounts, investing in bonds, investing in stocks, and so on. But you cannot be in a situation where money comes and it all goes out, and then we're wondering, how do we save? Decide, how much am I going to save every month? So how do you pay yourself first? You first have to know, where is my money going? And then decide, how much can I actually save given where my money is going? What do I need to cut out? How can I increase my income? But mostly, what do I need to cut out? And then you'll decide, this is the figure I can save every month. My suggestion to you is set a standing order and automate it. The same way your pension goes out automatically to, say, Britam, for your pension. It's the same way you need to also save as well monthly or as often as you can. So decide how much that is, and to the extent possible, create a standing order. What is a standing order? It is an instruction that you give to your bank and tell them that on the 5th of every month or on the 2nd of every month, could you please send 10,000 shillings to this savings account? And you give them those instructions, sign, and every 5th of the month, that money goes out. It's just the same way KRA gets paid. And the beauty about that is that you're not thinking. There's a book that is written by a gentleman called James Clear, and I love this book. I recommend it to everybody. It's called Atomic Habits. And he says that you do not rise to the level of your goals. We don't rise to the level of your goals. We have all these goals and things and plans, but we never rise to the level of our goals. We fall to the level of our systems. So that's why I'm saying create a standing order, create a system where you're not having to think every day, do I do this? Do I not? Should I not? Don't give yourself that opportunity. Create a system that will enable you to carry on and save your money automatically. And a year from today, you'll be so much further. Guys, I want you to decide, what am I going to do today from this information that we're sharing this morning? Because if you just listen and do nothing, nothing changes. So choose one thing that you can do. So we're looking at what is the money management system I'm going to create. The first thing we've looked at under the money management system is pay yourself first. Even if you are a vegetable vendor, you sell sukuma wiki, you sell tomatoes, or you polish shoes, it is okay. How much are you going to save every day when you get that 200 bob? Is it 10 shillings? Is it 20 bob? Where are you going to save it? Is it in a circle? How are you going to save it? But create that system. So the second thing now is invest now. We have to invest now, immediately, and with purpose. Investing begins with understanding, what is my goal? My goal is I want to buy, a house, or I want to buy an investment. I want to buy an asset. What's that goal? And so then you create an investment with that goal in mind. Then tailor your investments to reach that goal. So depending on your personal circumstances, you have to then think through, okay, how much income do I have? Do I have dependents who I have to take care of? What is it I'm earning? What other assets do I have? Am I in debt? So you have to think through those circumstances to be able to then now tailor the investor. So for example, if maybe I'm 30 years old today, I don't have any savings, I don't have any assets, but I can start saving 5,000 shillings every month. So then I look at, do I have debt? No, I don't have debt. Do I have assets? No. Do I have dependents? No. Okay, so because I have nothing else, maybe I should start with a SACCO, or I can start with a money market fund, and I can sign up with Britam, get my money market fund account, and create a standing order and have that money going straight to Britam as an example, to have my money saved there every single month. Then now when I get to a certain level in that money market fund, I can now start looking, what else can I invest in that will give me a higher return? And so now based on that, at least I have an emergency fund that I have saved. I have some cash available for opportunities. Now look at the opportunities that I can now explore. The other thing you must also do as you invest is save towards your retirement separately. Okay, separately. So you can't say, let me save for my retirement using my money market fund. I think it would be wise for you, even if your employer doesn't do it, if you're self-employed, consider opening an independent retirement account, please, because this one is put money away, it will be locked in, and when you reach retirement age, you'll be able to access this money. It will be professionally managed. And even if something happens, life happens, your car breaks down, something goes wrong, and you will not be able to access this money because you put it aside for your pension, as opposed to your money market fund, where in 2 days you have your money in your bank account and you can then use it. And so I'd say, please, when it comes to retirement, separate that money. All right, so now I want to come into my bonus section, and then we can open up to Q&A. Let me tell you, as Africans, we have this thing called black tax. I don't like to call it black tax, but it is the term that is used generally. And this term, black tax, came from South Africa. And the Black South Africans basically said that there's just this thing where when you're educated, your family pays for you or your parents pay for you to go to school. When you're done, you start working, there's an immediate expectation for you to help your family with expenses, with educating others, with providing for them. Now, I am of the view that, and this is, I guess, a disclaimer before I go into the details of black tax. Those of you who have parents, a mother, a father, one parent, or a grandparent who has raised you and is in your life, I think there is a lot of honor and blessing to be able to bless these people by giving to them and to their needs, even if they don't need it. Just that, gifting of parents is such a beautiful, honorable thing. And so I'm not considering that as black tax. That is me coming from a place of gratitude, from a place of respect and honor to just sort of say, I love you guys. Thank you so much for bringing me up, for all the sacrifices you made. And every 2 months, I'm going to give X amount to you, or I'll buy you flowers and I come and visit, or I'll do for you what, even it doesn't have to be money, it's presence and your physical presence and you being there. So that's different from black tax in my definition. Black tax, however, now comes in where the whole village, your cousins, siblings who have decided they are not working or something has gone wrong, then demand a lot. And sometimes it's even a positive thing. It may, not positive, but it may not necessarily be a bad thing that has happened. But, there's that expectation. Anyway, let me get to it. So how do you manage the expectations to support extended family? One of the things I've seen with Kenyans is some, especially younger people, is some even having to take mobile loans to support their loved ones, uncles, parents, because of that expectation. Now, the first thing I would ask you to do, if you are indeed in this situation where black tax is getting overwhelming, is please have an open and honest conversation about your financial limitations, because we have limitations. I only earn X amount. I can't give the whole village all my money. And if I do that, then it doesn't help anybody. So how can I just sit down and say, guys, I love you. I want to support you, but I can only give you 2,000 in a month. That's the most I can. Or in this season, I'm in so much debt, I actually cannot give you. I'll probably need about another 8 months for me to stabilize, and then I can, but have open and honest conversations about your financial limitations. The problem is that there's this expectation. People ask, they guilt trip you, but you say nothing. Something else is we need to create boundaries. Boundaries are so important. Boundaries are important for us to have. And boundaries are basically where you say, this is my compound, you don't pass here. I mean, can you imagine somebody, your neighbor coming to tell you, please cut your grass a bit lower, plant 16 yellow flowers, and please have green ones and purple ones and red ones, because those ones you have are not nice. Black out those ones. I mean, it's like, excuse me? What gives you the right to come and start telling me what to plant in my garden? We have to create boundaries, and that's normal. But I find we create boundaries around our spaces, we create boundaries. But when it comes to our finances and our families, we struggle, and I don't know what that's about. But we need to create boundaries so that we don't give to the point where you're even sabotaging yourself, where you give, you're now 75, and then you have nothing. Now you can't help anybody. Now you're now the one asking. So please create boundaries around your finances. What does that mean? Set clear amounts. This is the exact amount I can contribute, but not beyond that. And then discuss with other family members. There's so many times you find there's only one person in that family, just because they are Dr. So-and-so, engineer so-and-so, architect so-and-so, and they have this title. Everybody else thinks, no, they're the ones who need to give. No, everyone needs to contribute their fair share. So have family meetings, talk about it, and discuss who is going to contribute what, their fair share given their ability. But it can't be one person who's doing everything. Commit to increasing your financial knowledge as an individual, so that I know, how do I grow my money? How can I create passive income streams? What else can I do to increase multiple income streams? How do I secure my retirement? So that I grow my financial knowledge, and in that way, then I'm able to grow myself and will be of more value for myself and my family, and I'll not end up sabotaging my finances. So then what does that include? How do I budget? How do I plan my finances? What investment options are available to me? How do they work? We have a fantastic course, by the way, that's available. I don't know if Rewa is on the call. She's my assistant. If you can post, we have a free, we actually have a free video where I talk about investment options and financial planning in the different seasons of your life, and it's free. And so you can be able to watch that and see, and at least start there with your financial knowledge, okay? So the other thing is that you must start investing as quickly as you can. Maybe you're on the call, you're 20-something, and your family is looking at you like, hey, we can't wait until you have that job. Please start investing as quickly as you can, and start investing in options that can generate an income that you use for supporting a family. Some years back, I had a very nice visit in my office from a Kenyan footballer who plays internationally. And he came and sat with me, and we were just talking about how he wanted to invest, and he said, I support the whole village, literally. He has like 5 kids, he pays for education, you know how it is. And so what we then structured was, how can you invest in instruments that will give you income? And instead of giving from your salary, your active income, it's your passive income that then is paying off the school fees for your family, giving your mom money. And that's the ideal situation, where you invest in vehicles that generate dividends or interest, and that's the money that then you use for supporting your family. And now my final one, where Black Tax is concerned, as we now come to a place of opening up for Q&A, is one of the things that happens when people grow older is that you need medical insurance. I mean, because there's just a lot of need, you know, there's underlying conditions that start to come, diabetes, high blood pressure, and so on. And some parents have to get onto medical medicines that they're taking every so often, seeing doctors all the time. So when it comes to parents, whether or not they are needy right now, I think it's important to set up medical insurance as soon as possible. BRISAM has I think it's Milele Health Plan, where you can get a post-retirement medical cover. And this post-retirement medical cover is such that then you can actually sign up your parents for it and pay slowly over time. And then when they do get to retirement age, if they haven't retired yet, then they're able to access that retirement. And even for yourself, from the age of 18, you should actually start paying for this medical cover for yourself, so that then you don't end up putting your children in a situation where they need to support you financially. So set yourself up now and start paying small amounts of money, 5,000 a month, or whatever it is that you can pay towards your medical insurance at the point of retirement. So you put your money in this savings vehicle, save slowly over time. When you get to the age of 55, 60, you've reached retirement age, you no longer are receiving medical insurance from your employer, you would then get this medical cover, and it is a lifetime cover. And the cover is wide, depending on which level you go for. You can actually even get pre-existing conditions and life-threatening conditions also covered. And so it's a really great thing. But even if you can't afford that right now, at the minimum, make sure your parents have NHIF. Make sure your parents have NHIF. So put them on an NHIF cover so that you create a system for yourself where you're not having to every month, you know, take out money towards supporting your parents' medical care, because you don't know what your situation will be. As we started this, I said, you know, it's uncertain. We don't know what's going to happen. Life is, you know, unpredictable. So please make sure you set that up. Before we go into Q&A, I kind of just want to share one thing. And I think this one thing is the fact that a lot of people have a tendency to despise small beginnings, you know, and, you know, that 200 shillings, that 100 shillings, 500 shillings, 1,000 shillings, do not despise small beginnings. Start where you are, but start today. Guys, if you put 5,000 shillings today, and you decided every single day, every single month for the next 35 years, I'm just going to put 5,000 every month, 5,000 every month, earning only 10% per annum. In 35 years, you will have 17.8 million. Now, please listen to me. Out of that 17.8 million, only 2.1 million is the amount you will have removed from your pocket, from your wallet, from your bank. 2.1. The rest, 15.7 million, will have come from interest earned. That's the power of time. And so don't wait another day. Set up that pension account. Set up that money market fund account. Set up that account with a SACCO if that's what you prefer. But start investing today and earn a return that at least is higher than inflation. Inflation right now is 5%, but it's on average between 5 and 7 in Kenya. So make sure you're earning at least higher than that, and you will be so much happier for it in time. So allow me to stop now because I want to give enough time for Q&A. So I'll hand over back to Magdalene. But in the meantime, we have lots of resources that are available. We have a free YouTube channel that you can go with a lot of content, and I have a book available. You can take a screenshot of that, and in case you need to have a quick discussion around that, get any information, best in a position to assist you. So Magdalene. Over to you.
Thank you, Rina. That was amazing. This has touched so many of us. Personally, it has touched me. I like what you've said about lifestyle creep and how guys get into debt because of the lifestyle creep, and you get lifestyle inflation, and now you want to move to the leafy suburbs because you got an annual increment, and you forget that your money is still being taxed. So this has also come at a very timely moment when you're doing so many statutory deductions, and yeah, you need to know how to budget the little that is left. We've gotten very good feedback from the chat, and I'd like to point out a few questions. I'll direct them to the team. We have one question asking the 30% of the rent that you should allocate in your budget. Is it gross or is it net? So that will be handled by Rina. Another question is, when you talk about savings, which savings channels do you recommend? Do you recommend money market, T-bills, bank deposits, SACCOs? So Rina will mention on that. There's also another interesting question on the flooding. So the current flooding in Kenya, whereby we are getting places that have never flooded now flooding. How's this thinking? So what would you advise in terms of real estate investments? Is it too risky? Martin will pick that up. So let's take those three first, then we can take the next questions coming in. Martin, you can start, then Rina can go in with the first two.
Thank you very much, Magdalene, and to Rina, thank you very much for the presentation. I think personally I've been enlightened on the question that has just been asked about the current situation where there are floods all over the world, actually, not only in Kenya. So as Britam, I can start by saying that our purpose is to safeguard your dreams and aspirations. So we try to focus on ensuring that we provide you with solutions that can mitigate certain risks like flooding. Last year, Britam launched the flooding insurance solution. And since the flooding started, I can confirm to you that we've been able to pay claims to various households that amounts to almost 20 million in the last period that the flooding has been going on. So yes, we do have solutions that can cover your household from the domestic package to ensure that if such eventualities happen, we can be able to support you during these difficult times. So I think with that, I can hand it back to Magdalene to guide on the next questions.
Thank you, Martin, for that. Rina, I hope you've noted down the first two questions. You can just answer them.
Okay, thank you, Magdalene. The first question was on the limit I am suggesting for maximum of income that you should pay towards rent or rent and utilities. Excuse me, I think it should be based on net because that's what you're taking home. The rest is tax. So to the extent possible. If it is not, then you can start with gross and try and manage your expenses in that way. But taking a loan or a mortgage that then goes beyond that, all that means is that you're going to sacrifice ability to save and do other things. So also it depends what you're taking the loan for, how long the loan is for. So that also needs to be a review. But for now, let me say 30% of your net income. Thank you.
Thank you, Rina.
Sorry, so the next question was on which investment option is better. Was that the question? Money market funds, T-bills. So what happens before I guess you analyze investment options based on what is my goal? Am I looking to put money aside for an emergency fund? Am I looking to put money aside to be able to secure my retirement? Am I putting money aside to save for my next term's fees? What am I doing? What is my goal? Now, when you know your goal, then it's easy for you to decide what to do. So for example, you might be young and you want to be able to borrow money to buy a unit, a rental unit, or you, let's start with that one. So if that's the case, you're looking to accumulate money somewhere, then you would start with something that will allow you to borrow against your savings. So maybe a SACCO might work well for you, because with a SACCO, you can get 3 to 4 times of your savings. Perhaps you want to lock in money somewhere. You have a project in 3 months. You have a lump sum right now. A T-bill will work better for you. Maybe you have an expenditure in a month, and you cannot use that money. You cannot afford to lose it in any way, and you have only 1 month. So in that situation, then you can say, I'll either put it in a money market fund, or I'll put it in a fixed deposit with a bank if they can give me a good interest rate. So also depending on the kind of personality that you are, what your goals are, how much money you have, then you would decide on the investment option. Thank you, Magdalene.
Thank you, Rina. We still have some more time to take on a few questions. So there are two questions touching on social responsibilities and finances. So there's one that is asking, where do we put charitable or church responsibilities in our budget? There's another on how do you manage the many contributions going towards burials, weddings, those committees that you invited in on WhatsApp, how do you manage that? So those are on the social responsibility on budgeting. And a few more questions on creating an emergency fund. So what do you do when you can't save 6 months worth of living expenses towards an emergency fund? Perhaps you could also tell us how can you work towards getting 6 months of savings in an emergency fund? There's also another question. This one will be taken on by Martin. On saving for pension, what is the recommended percentage of income that one should save? And finally, one on partnership or rather marriage. How do you navigate individual versus family projects? Martin, you can start, then Rina will take the others.
Thank you, Magdalene. And thank you for the question to the person who asked that particular question. So the question is on around how much can you be able to save so that you have a good retirement. Now, the definition of retirement first has shifted. For the longest time, the focus was on hitting a certain age. But I think that has now changed to being able to hit a certain financial target. So you don't have to wait until you hit the age of 60 to retire. If you plan well, you can even be able to retire much, much earlier, depending on whether you've made a good plan towards that particular target that you want to achieve. So I think Rina has talked largely about just the need to ensure that you are able to invest in other areas. But for this particular question, I can focus more on retirement. So in retirement, there's something called the income replacement. And I want to start by highlighting on this quote. You can survive without money when you are young, but the chances that you will survive without money when you are old are quite slim. So when you are young and active, it's very, very important to start saving as early as possible. And the reason why I'm bringing up this particular scenario is the question is around how much can I put aside to be able to, be comfortable at the point of retirement. Now, it's pegged on what we call the income replacement ratio. The income replacement ratio works in such a way that if you are young, you are likely to put in more money such that by the time you get to your retirement, you will be having enough money to take care of you. So let's not look at it in terms of you hitting a certain age, rather hitting a certain financial target. So, and probably this is a question that I can throw in just to the rest of the audience, and probably if you can just be able to chat. So how much money is enough? I know that definition is so difficult to explain, but as you are planning for your retirement, it's very, very critical that you focus on what you want to achieve at the end. Based on statistics, it's important that you are able to replace your last income by 70%. That means if you're earning 100,000 by the time you're retiring, you should be able to replace your income to 70,000. So how do you do that? It is a computation that is more dependent on which age you start investing. And that computation indicates that if you start investing, let me say 12% at the age of 25, you are likely to get an income replacement of around 62%. However, if you are contributing around 15% of your salary and you start investing at the age of 25, you're likely to get an income replacement at the point of retirement of around 78%. Now, if you work it out such that you start investing at the time you hit the age of 30, you are likely to have an income replacement at retirement of around 53%. That is contributing 12% of your salary. If you contribute 15% and start investing for your retirement at the age of 30, you're likely to get an income replacement ratio of around 66%. Now, if you continue and wait until you're 35 to start investing and you're contributing 12%, the income replacement ratio would be 44%. What I can assure you is you wouldn't want to be earning 44% of what you are earning at retirement. So if you are earning 100,000 at retirement, if you started investing at the age of 35, you are likely to be only getting around 44,000. That is if you're contributing 12%. But if you're contributing 15% at the age of 35, and you start investing at the age of 35, because now you're contributing more, you're likely to get an income replacement ratio of 55%. That means if you are earning 100,000 at the point of retirement, you're likely to be only getting 55,000. So this computation has been based on various scenarios of inflation, various scenarios and possibilities of how likely your income is likely to grow over a certain period of time. But now, if you want to retire much, much earlier, then it is important that you consider putting in much, much more than 15% of what you earn, such that by the time you are retiring, especially if you start investing very, very early, let me say at the age of 25, if let me say you are contributing 20% of your salary, if you get to retirement, you're likely to be getting almost over 100% of what your salary will be at that point. So clearly, you'd want to be earning much, much more than what you are earning, than you earning much, much more at retirement than what you are earning during your active years. So with that, I know I've taken quite some time, Magdalene, but I can hand it back to you. Thank you. I just needed to emphasize on the aspect of income replacement.
Thank you, Martin. That is very, very informative. Remember, the best time to save is years ago. The second best time is now. So if you didn't start yesterday, start today. Rina, over to you on the other questions.
Thank you, Magdalene. That was so, Martin, thank you. You know, hey, it's a reality check for us, those of us who are over 35. Thank you very much. The first question was on social responsibility. How do you deal with all these different things? There's a burial, there's a wedding, I need to contribute in your budget. So you would have a giving line item in your budget. You would know that every month I'm giving X amount of money. So that would then be the amount I'm willing to give if it's a funeral, if it is a wedding, if it is a birthday, it's your giving budget. So ideally what you want to do is set that money aside and have it available for when that time comes, because it's something that is budgeted for, so that then it's not something that just comes and we have not made plans. So as much as possible, include giving as part of your budget. Now, there was an issue about tithe and saving. And I don't know whether I dealt with it, but what happens is I talked about you not spending more than 60% of your budget. The 40%, there's 10% tithe, there's 10% saving, and then 20% investing. Of course, the tithe is part of that because it is investing in our future elsewhere, not on this planet. So we would consider it under that 40%. Now, then there was a question about emergency fund and how can I get to 6 months of my emergency fund? So the question relates to, so you calculate your emergency fund based on your monthly expenses. So you would ask yourself, what are my monthly expenses? If the figure, let's say, is 100,000 shillings, then you would multiply that by 6 and work towards building that monthly expense. So I mean, emergency fund. So the ideal situation is, yes, okay, you want to have 6 months, but it might take you time. It could even take a year and a half. So you start with 1 month, then work towards 2 months, then 3 months. And ideally, you want to just keep building that over time. You don't have to have it within, a very short period of time. Have a plan towards it, even if it takes you 2 years to get to the level of emergency funds that you would like, because some people need even 12 months. It's okay, just work towards that, because you don't want to only have all this amount of money in an emergency fund and you don't have any other investments. So you work on your emergency fund as you work on other investments, as you work on putting your money in retirement, as you work on other investments. So it can take some time, but start with just 1 month and then build towards 6 months over a long period of time. I've seen a question, please repeat the percentage again. What I said was, you don't want to spend more than 60% of your income. You want to maximize your expenses to 60% of your income. The 40% that is left includes tithe, which is 10%, or giving 10%. Then you've got saving and investing. So that's the balance, but you want to try limit your expenses to 60%. The final question was around how do you navigate individual projects versus family projects when you are married? So I think one of the things that's been very helpful for me is to take time to understand who I am. We all have a different relationship with money, and we relate with money in so many different ways. We all have emotional needs, and money meets different emotional needs for us. For some, money is equal to wellness or happiness and joy. For others, money is equal to security and safety. For others, money is equal to power. For others, money is equal to independence. Now, when you come to a family situation, you need to recognize that there's these different personalities that come into play. And so when these different personalities come into play and different ways that we relate with money come into play, there's a tendency to have a bit of conflict in our approach. Because there's some who are just like, that's too risky. I'm sorry, I'm risk averse. Someone else is a risk taker. Someone else is a dreamer and wants us to dream about doing great things. Others are like, hey, wait a minute, let's plan, put it on Excel and do a good job about that. So awareness around who is your wife, who is your husband, how do they relate with money, and how can we meet in the middle in being able to save together, invest together, and get into projects together. I think that's a good place to start, but also communicating what your goals are, what your needs are, and listening to theirs without wanting to stop them. So listen to one another, hear where people are coming from, and then find a third way to make things work. So that would be my suggestion there. Magdalene?
Thank you, Rina. That is very insightful. I'm wondering, should we have joint bank accounts or individual? But that's a conversation for another day. A few questions coming in from YouTube. We have Solomon asking, is saving or rather investing towards your studies considered an investment, or rather paying for school fees, is it an investment for further studies? There's another question on, for those living in their own homes, how can we be disciplined to save the amount not incurred as rent? So those are a few questions from YouTube. A few more questions coming in. There's one on the self-employed people. Someone is asking, how can a self-employed person borrow? What are the avenues for borrowing for a self-employed person, possibly a contractor? Another question on that is that, so what advice would you give for those who are in contractual jobs to save towards retirement? So Martin will pick that up. And in the same line, for a person doing additional voluntary pension contributions, how do they save on tax? What's the benefit of doing that? So Martin will take those two last questions, and Rina will take the first ones. And yeah, Martin.
Thank you very much, Magdalene, and thanks, Rina, for the responses you've given to the various questions. I think it's been really, really enlightening. So the first question is on which products we would actually consider for contractual staff. So I know when I started, I did not highlight on the various products that Britam usually provides in terms of retirement planning. So I think this is also an opportunity just to talk about the various products that we currently manage or we currently administer in retirement benefits. So our products are divided into two. There's the pre-retirement savings, and I think that is what I've been talking. I talked about when I earlier talked about income replacement. So we have various products that can enable you to save while you're still young, because remember, the push is to try as much as possible to save as early as possible. So one is we have the individual retirement plans. It's divided into two. We have a pension and a provident. And remember, when it comes to financial investment, it's more about what you're trying to target, what you're trying to hit. So if you want a pension, something that will enable you to have regular income at retirement, you'd go for a pension. If you want your full lump sum so that you decide what to do with it at retirement, you will go for a provident fund. So under the individual retirement plans, you're allowed to put in any amount of money that you are able to put in. But even as I'm saying any amount of money, remember the discussion we've just had about the income replacement. What are you trying to achieve as the end result? And at what age would you want to retire? Remember, it's not really about the age, rather it's about what you are targeting, the financial freedom that you are targeting. So at what age are you targeting that financial freedom to be able to retire and, just focus on other things that you like to do? So that is on the individual individual retirement plans. Two, we have the umbrella pension and provident. I think I want to explain the difference between pension and provident again. So the umbrella is an hassle-free kind of scheme that enables you to enables employers to be able to invest for their employees for retirement. So under the umbrella scheme, it has been structured by Britam in such a way that as an employer, all you have to do is just to put in the money, and Britam will invest it to you. Britam will handle the trusteeship of of the umbrella fund. Britam will ensure that everything in terms of compliance is managed from our end. At the same time, we do have the standalone schemes that enable big organizations. This is majorly recommended for big organizations who want to take charge of their retirement investment. So if an organization wants to take charge of their retirement investments, then the ideal position is to start a scheme where, as an organization, you are charged with appointing the trustees to represent the members, the trustees to represent the organization. Then thereafter, you do the setup through the various registration through the Retirement Benefits Authority. You seek for tax exemption, and you go through the whole compliance. But if you feel that's a bit, it's quite a bit of hassle, then you can take up on the umbrella scheme where Britam takes up most of the compliance activity, and the scheme is already set up. And at that point, I also want to highlight that if probably you've been tracking, and I know these deductions has gone to most of the members, the NSSF 2013 Act, where you are allowed to contract out some of your the tier 2, that's the NSSF tier 2 contribution to a pension scheme. I want to confirm that the Britam umbrella schemes are registered to allow NSSF tier 2 contributions to be directed to that particular fund. We also have, for the IPPs, you can also be able to contract out to the IPPs, or what we call the individual retirement funds. You can be able to contract out the NSSF tier 2 contributions into these various funds. Lastly, we handle retirement income. So this is the post-retirement, where Britam manages an annuity. An annuity enables you to get a regular income for the rest of your life. I think I won't elaborate much on that. We'll actually organize another meeting or another webinar just to talk about retirement income. It's quite a wide topic. So the purpose is, once you've invested during your younger years, then you will have a product that is structured to enable you get regular income for the rest of your life. We also have an income drawdown plan that will enable you to get regular income. The difference between an annuity and an income drawdown is on the investment risk. The income drawdown is more dependent, or the investment risk is held by the individual who has taken up the policy. While for an annuity, the longevity risk and the investment risk is held by the insurance company, and that would be Britam. So with that, Britam just ensures that all through your retirement, you are able, through an annuity, you are able to get regular income for the rest of your life. So for a contractual person, I would actually recommend the individual retirement plans, where you can be able to put in any amount of money that you would prefer. And I'll combine it with the second question, which are the tax exemption. The government provides a tax exemption if you are contributing to a retirement scheme, where you are exempted up to 20,000 on a month-on-month basis, which can translate to 240 on an annual basis. You will be exempted from tax towards a contribution to a pension scheme. So that is one of the key advantages of actually investing for retirement. I think with that, again, I'll hand it back to Magdalene and Rina. Thank you.
Thank you, Martin. I like what you've said. The beauty with the individual plans is that it's flexible. So if your income is coming quarterly, you could adjust and contribute quarterly. If it comes to a point where you've changed businesses and there's a slowdown, you could pause here. So thank you, Martin, for that, for talking to the contractual people and guys who are self-employed. Serena, you could take over with the other questions.
Yes, thank you. Thank you very much. The first one was on paying of school fees. If I want to go back to school, my payments or my fees and investment. So I like to look at investment in like a pyramid. If you think about the triangle that is used by Maslow's hierarchy, and Maslow's hierarchy basically has basic needs, your need for shelter, food, security. Then it moves for your need for belonging, and your need for intimate relationships. Then it goes to self-actualization. So if you think about it that way, let's go down to the basic level. At the basic level, you're looking at meeting needs for security and safety. If you look at it now as an individual, my going to school to get a course that will help me, a certification, a license, gives me security in my job, or gives me the ability to get more clients if I'm in business, or gives me the ability to diversify my income options. So because it's part of that security safety net, it is an investment in the sense that I am investing in my potential future to earn more or to secure my income. So if I'm paying school fees for myself, for a course that will improve me, I would say yes, consider that as part of your safety net to secure your income, or perhaps even give you the opportunity to earn more. The other one was, how can I be disciplined when I own my own home to put aside the money I would be paying for rent. My suggestion would be, remember I said we don't rise to the level of our goals, we fall to the level of our systems. Create a system. How much would you be paying rent? Is it 100,000? Is it 50,000? Whatever the amount is, go to the bank, set a standing order to either a SACCO, to a pension, to a money market fund, to some savings account, and set that standing order. And that money then will go there without even you thinking about it. And automatically, because you don't have access to that money, your lifestyle will actually meet whatever is left. And so you will actually save that money. The other question was, how can a self-employed person borrow? Yeah, and it's a good question because you find financial institutions will ask for a pay slip. And so if you're self-employed, one of the ways that you can do is work towards creating your business and separating yourself from your business. So I have two options for you. That's one option where you give yourself a salary instead of using your job, or your business account to pay for your shopping, to pay for school fees, to pay for different things. You can separate your income and pay yourself a salary so that you separate yourself from your business. When you do that, then you do get a pay or an income every month, and you can use that as your income that you go to the bank with and show and demonstrate you're earning an income. Option number 2 would be to open a SACCO account and save towards, have savings in your SACCO. The beauty about having savings in a SACCO is the fact that you'll be able to borrow against your savings up to a maximum, I think, of about 4 times your savings. So the beauty about SACCOs is that they're not going to ask you for your pay slip necessarily. It's the savings that you have that will help to guarantee your loan. So for self-employed person, that's one way that you can go. Alternatively, then it's to invest in an asset that brings in a cash flow, and the cash flow from that asset can then go towards paying the loan. Perhaps I can just give a quick example of a client I encountered. So this was a gentleman who had a business, and he sold his business completely. And he ended up with 100 million shillings. And he decided to invest that 100 million in a bond, a treasury bond, and it was an infrastructure bond. That bond at that time in that year was earning 15% per annum, tax-free. So if you're earning if you have 100 million and you're earning 15 per year, that's 15 million shillings a year. And he had some land that he wanted to develop. And so he went to the bank and asked them, look, can I borrow money against my bond? And you can have the bond as security. And so the bank accepted. They took the bond, so the bank now held the bond, and the interest that would come from the bond goes to the bank, and he then was able to borrow 100 million to develop the land that he had, build apartments. 5 years later, he had finished building. He was now getting tenants in. When the building was fully occupied, he went back to the bank and said, I have tenants, they're giving rent of this amount, and the value of the building is this. Can I have my bond back? You take the rental income that is coming from the apartments and the apartment block and the land as security, and allow me to borrow more against that asset. Take back my bond, and then I'll look for another piece of land that I can develop. And so he's grown like that. So you can use assets that are generating income to then borrow against. So that's what I was saying earlier in my presentation, as quickly as we can begin to build assets and income from assets, the faster it is we're able to grow. Magdalene?
Thank you, Rina. This has been very, very insightful. I want to acknowledge that we still have more questions coming in, but in the interest of time, we will respond to this while we are sharing presentations and recordings. Rina, I know you've touched so many of us based on the questions and the comments coming in. There's comments on how timely this is. There's comments on how informative this is. Guys are asking, how can we reach you? The presentation is amazing. Perhaps you could share closing remarks, contact details, should we need to further this conversation.
Thank you so much, Magdalene. Thank you so much, Martin. I've also learned so much from you and around pension, and I'm like, I need to increase my contributions, and I will do that. Now, I think my parting shot is that it doesn't matter where you are right now. I love what Magdalene said. The best time to have started was yesterday. The next best time is today. So just start wherever you are. and we're here to assist you. We have lots of resources that we can help you with, and I'll share my contact details. For those of you who may not have been here at the beginning, my name is Rena Hicks. I'm the Operations Director at FIDA Investment Bank, but I also have a lot of free content. We have a book that is out, and you can get access to us through sema@moneywise.co.ke. I'll post it in the chat before we go. sema@moneywise.co.ke. I'll also post our phone number for you as well. So if you have any questions, if you need any assistance, I'll also, if I get a moment before we close, post the link to the free masterclass that I was talking about, that has a bit more information about the different seasons of life and how you can plan your finances, taking that into cognizance. But otherwise, thank you so much, guys. It's been wonderful, and I really appreciate this opportunity. Have a great day.
Thank you. This has been amazing. Martin, thank you for your presence here. You've shared quite insightful information on pension. Any parting shot, closing remarks?
Thank you, Magdalene, and thank you, Rena, for the great presentation. Personally, I've also learned a lot about the need for financial wellness. But as a parting shot, mine is just to say that the key thing I've probably gotten from Rena is financial preparedness, financial planning is your own responsibility. Don't look up to anybody saving you. There could be, yes, but the probability that you will rely on someone else to save you with financial planning, be it your children, be it your parents, be it your spouse, I think the key thing is to ensure personally you are getting prepared towards various lines of investments, financial preparedness. Now, there are various aspects, and Britam is able to partner with you in all those aspects of investment, insurance, just covering for all the risks that are likely to come into your investments, and even to guide you through how you can just ensure that you are well prepared in terms of the various financial needs that you want to achieve. With that, I can hand it back to Magdalene. Thank you.
Thank you, Martin. We all know that information is power. So with this, you should be able to manage your payslip for those who are employed, and for the self-employed, you should be able to manage what comes in and how to grow your business. I'll finish with this, that failure to plan is planning to fail. Yeah. So with this information, you should be able, or you are empowered enough to plan for your future. Thank you everyone for attending. We will share the presentations and the recording after the session. So be on the lookout for an email from us. Goodbye everyone. Have a lovely day. Let's close with a grace. May the grace of our Lord Jesus Christ and the love of God and the fellowship of the Holy Spirit be with us now and forevermore. Amen. Goodbye guys. Have a lovely day.